Good morning, and here's your Modern Wall Street wake-up call on this, Monday, March 23rd, 2020. James Sweeney coming at you from an apartment in Brooklyn, New York. Now, U.S. stock index futures are in the red this Monday morning as Wall Street awaits Washington, D.C.'s lawmakers to agree on an economic stimulus and rescue plan to help ease the blow from the coronavirus. Now, U.S. futures regaining most of their losses overnight after the Federal Reserve unveiled an open-ended asset purchase program, which literally means limitless asset purchases. This as overnight futures did manage to hit their limit down levels, falling 5%. Meanwhile, a fiscal stimulus bill failing a key procedural Senate vote Sunday as Democrats warned the measure did not do enough to help impacted workers and instead offered too much for company bailouts. House Speaker Nancy Pelosi signaling she was not on board with the Republican version of the stimulus plan, saying, "From my standpoint, we're apart." Traders also waiting for any signs of a compromise as negotiations continued into the night. Most coronavirus-impacted stocks falling again this Monday morning in pre-market. We had cruise line Carnival dropping nearly 9.5% and hotel operator Hilton Worldwide falling nearly 5.5%. But Boeing shares rising 1% in pre-market, outperforming other stocks as Goldman Sachs made a bold call Sunday evening, telling its clients the companies had enough cash to survive the coronavirus downturn and that air travel would eventually return. The shares are off, however, 70% this year alone. It's only March 23rd. Meanwhile, the coronavirus outbreak leading the way for the New York Stock Exchange to close its trading floor and temporarily move to all electronic trading beginning today. Hence the reason why I'm not at the big board today. New York Stock Exchange expects trading to proceed as normal, and last week ended with all 11 S&P 500 sectors closing more than 20% below their respective 52-week highs. The S&P 500 on pace for its worst monthly performance since 1940. And investors have also been concerned by a sharp decline in crude prices. WTI crude falling 29.3% last week. That's the biggest weekly decline since January 1991. And lastly, some advice. Sometimes you just have to sit back, relax, and make the best of your situation.